think what's impressive here is not just looking at the broad market. When you start looking under the hood, the move has been remarkably broad. Earlier this week, you had 70% of the S&P make a one-month high. That's one of the best readings in history. When you get surges like that, it's reflective of participation really broadening out. And that's the thing we've been talking about for months and months and months. And I think what's important is where you see it is down the cap scale. Russell 2000 above its Monday highs here. We've started to see small caps outperform. The value line has also started to outperform. So any index that looks to measure participation is really starting to get in gear here. When you start seeing those spikes in new highs, your forward returns over the next 3 and 6 and 12 months tend to be really strong. So we like what we're seeing under the surface. We think it's more important than any level. Our best guess here is S&P pushes 3,800 into year end, but it's what's happening under the surface that's most constructive.
Let's hit some of the movers today. Shares of Cisco rallying hard after posting a quarterly beat on both the top and bottom line. Cisco says demand for its products remains elevated as people around the world continue working from home. CEO Chuck Robbins joining Squawk on the Street earlier today discussing how Cisco's video chat software, WebEx, is faring in light of competition from the other stay-at-home winning stock, which is Zoom. Listen.
Number one, I think the overall market has certainly expanded, and WebEx has done a great job. Our team's done a great job of scaling. When our customers begin to go back to the office, they're going to put high-def video in every conference room because every meeting is going to be hybrid. And we haven't seen that yet. And when you start looking at high-definition video in conference rooms, we are the leader, tightly integrated with WebEx, and we think that'll continue to create a tailwind for that business.
Chris Verrone, nice move in Cisco today. Hasn't done much over the last year if you look at the chart. What do you make of it and the general stay-at-home trade right now?
Yeah, I think that's right, Sarah. It really has not been a great chart. It really has not participated with many of its peers. What we find most interesting about this, quote, stay-at-home trade is as the virus count has gone up and we've seen lockdowns in Europe and some new lockdowns here, stay-at-home stocks actually peaked 3 weeks ago. The stay-at-home index peaked on October 13th. So the market is interpreting this wave of the virus very, very differently than what we saw in February and March and April. Names like Netflix and Zoom and Amazon, which were really the bellwethers of that stay-at-home trade, have been underperforming for the last month. I think conversely, when you look at the risk-on names, the Expedias and the LVSs and the MGMs, their strength is suggestive the market's looking past this wave of the virus. I think that's encouraging for market bulls here.
Shepard Smith here. Thanks for watching CNBC on YouTube.